Arvind Sanger, good morning, or should I say good evening?
Hi. Good morning, good evening.
So, will it be a good night for the market soon, given that US and China are not talking, or it will still be good morning, given that US and Japan are talking?
I think the good news from an India standpoint is that deal with Japan seems to be near, and I think India is probably likely to be next in line. So if India is able to get a deal which largely eliminates the tariff threat, other than that 10% minimum that Trump seems to have decided as a baseline, if that's the case, then I think that puts India in a favored nation. I guess in today's new world, it'll be in a favored nation without the uncertainty. So Japan could be the template for what follows, because India is probably right up there in terms of doing that. So I think India is relatively well positioned. China is clearly the odd man out, and EU is actually having a tough time coming up with a deal. Whereas I think Prime Minister Modi has played his cards extremely well, and so I think that India, in addition to being less of a global trading dependent, also is kind of positioning itself to be a relative beneficiary in these global trade wars.
Okay, so Arvind, do you think global markets have a bottom in place and we are now likely to be moving in a, well, predictable, it could be volatile, but more like a predictable band?
I'm not so sure, because I don't think a recession risk in the US is off the table, because the amount of tariffs on China is such an important trading partner, and the uncertainty about EU, these are the two biggest trading partners for the US, is still out there. And from a business standpoint, there's a lot of uncertainty about what decisions to make, and consumer prices could see some hit. And you had the Fed today, Fed chairman, talk about the fact that they have to watch inflation. So I think there's enough uncertainty that I don't think we can say the bottom isn't in the markets. What we saw is that President Trump reacted not to equity markets, but to the bond markets. So to the extent that the bond markets start acting as a break, then maybe the bottom is in equity markets. But to the extent that economic slowdown could be a little worse than people expect, then there could still be downside in US markets. But I'm not sure that's a global problem. That's a very US problem. I think the bottom may be in for many emerging markets like India, given that things might actually, domestic economy is fine, and things from a US risk standpoint may lessen somewhat.
That, Arvind. Hi, evening to you. Wanted to understand, I mean, what should India investors look at now? Would you still say keep the alignment towards large caps and the safer ones which have been performing like banks with still value on the table, or is it time to slightly add on to more risk?
Since I'm not completely comfortable with the global risks and the global growth scenario, I still would favor larger caps. But there are many sectors. Banks is obviously an obvious one. There are sectors that have lagged in India. Power demand has been weak. Maybe that comes back to life. Steel, cement, these are sectors which are more domestic facing. There might be some tariffs coming on Chinese steel imports. So there are many domestic facing sectors. Obviously, FMCG stocks have been a place to hide out in the recent past. So, I think domestic facing in general, and more higher quality companies, they don't have to be large cap, even if they're mid cap, higher quality companies. I think that would be kind of our viewpoint, because we don't think that the markets have given an all clear signal where, global risk is back on completely, especially if you get US inflation, and you could get, tightening of financial conditions in the Fed. And while RBI is clearly loosening, I think domestic facing would be higher quality companies would still be the preferred route.
So Arvind, last time when we spoke to you, you did say that you were shopping. Are you still shopping or waiting for the next Flipkart sale?
I've been shopping. We have added some positions, and we're looking at some sectors like power and others that have lagged to see if there are opportunities to shop further. So we're not sitting on the sidelines in a market like India. We are much more on the sidelines in a market like the US, but in a market like India, where we think the fundamentals are now on a mend, the worst maybe behind us in terms of the near-term economic slowdown and the global risks. But that doesn't mean that we're shopping in sectors like IT or pharma, which are more U.S. facing, which we don't think are worth risking on. We are shopping much more domestic facing.
But Arvind, just to wrap it up with one more contra question perhaps on IT, are we reaching that point of extreme pessimism in IT while the headlines would always be bad? The fact that AI is disruptive, we know it. The fact that tariffs could have impact on IT companies, it's a real deal. I mean, Indian IT companies still have a lot of cash. They continue to generate a lot of cash and they regularly do buybacks. So can they be just value buys now?
They would be value buys if they were trading at lower PE multiples. I think the PE multiples are still not, maybe relative to other Indian sectors, maybe they're not that expensive. But we think this is, probably dead money. Bottom fishing in IT may be a little early because if US is going into a recession, then it might be too early to buy. So until we get a clear sense of the US economy, I think bottom fishing in IT may be a little early.
Right. Okay, Arvind, so great having you on the show. Thanks for your time as always.